Well, hello everyone. Welcome back to the channel. So there's been a lot of obviously negativity going around about Tesla and Tesly since Tesla stock has been dropping significantly. Some of it is understandable because it's obviously very concerning given the drops in Tesla stock. But I wanted to try to be as positive as I could. And one silver lining that I actually found in the whole thing is that the percentage dividend payout for Tesla has actually gone up. So it's now at 77%. And I want to do this video to illustrate a very important point here because this is, even though this is a positive spin, this is actually what you call, or what I call the dividend paradox. So what happens when a dividend payout is around the same amount, say 55 cents or 58 cents or so, but then the underlying price plummets, your percentage goes up. So on paper, it looks great. It looks like, wow, we're back to a 77% dividend. But dollar wise, what you have invested in the underlying could have fallen in half. So the the positive is that we're back up to 77% payouts, which is remarkable, but we've seen some pretty significant principal erosion. And we have Mr. Cardona on. Welcome. Thank you for joining us at such a late hour. Uh, yeah, it's almost time for coffee, right? It should be a big day today, but got to churn them out when I can. Um, but I want to use this video. I want to take this opportunity to hopefully educate all of you all, help enlighten all of you all, where I can. That's what I'm here to do. So let's go to Yahoo Finance and look over the recent performance of Tesly and Tesla. So we've obviously had an abysmal week for both. And let me start the share here. Oh, welcome. We got an OG on. One thing I do want to point out also, just some quick household items here. So Jay definitely will be back on the channel. Jay feels very respected by our community. It's always been a cordial interview, very polite, professional, and Jay happens to like tough interviews. In fact, the last couple interviews I did, Jay actually thought he felt like I could have asked tougher questions. And if you all go and read some of the subreddits and things that are out there, other people echoed those sentiments as well. So I'm kind of alarmed. I see in some areas there was a belief that I was somehow disrespectful of him or whatnot. So I can tell you all from the horse's mouth directly, he doesn't feel that in any way, and he actually welcomes tough interviews. So with that being cleared up, oh, welcome. So I just saw. Hold on a second. Let me get this comment here. We got, I'm trying to switch over here. I want to switch back here real quick. We definitely don't want Amex ads on here. You all know how I feel about Amex. Welcome, John, loading up on FEPI and YieldMax. Yeah, I saw you commenting on another channel, but glad you're back here with us today. ARK Funds bought thousands of shares of Tesla. Yeah, I know Kathy Woods bought a lot of Tesla today, actually. So... all right, well, hopefully this video will bring us a lot of clarity, because there's a lot of, what would the opposite of clarity be? Unclarity out there. All right, so Tesla has fallen below $200 a share, which I've got to give certain fans of mine credit. Like, I want to say Hoffman was one of the first ones in the summer to say Tesla would be closer to 200. It would hit 200 before it hit 300, I believe is what he said. So got to give credit there. We definitely have some very smart fans, of course, and that's always is a welcome sign. Okay, so we were up 62 cents today. 183.25 is where we closed out. Obviously, we've fallen in the last 6 weeks. We've fallen from 253 to 183, so that's a $70 drop. So it would have been a good time to have some puts or to short this. And just so you all understand, stating the facts, stating reality is not being disrespectful. That's, I think, from my standpoint, from the YouTuber standpoint, I think that's very important to have a level head and to to shed some light and to discuss reality to all the people that are trying to find information. I think that's a really important thing. So, all right. So this is where Tesla is. And so TSLY is actually coming up here. We're all the way down to 873, which we've been dropping a lot. I won't quite cue the air raid siren today, but this is definitely alarming. And there is talks of a reverse split, because I believe Jay has said that if it fell below $10, they would consider a reverse split. So we're looking at, we've got like a straight line down like this. And then we had a big drop over here on the 24th. We dropped a whole dollar, because obviously when Tesla earnings came out, they dropped. So the positive side of that, if there is a positive in all of this, hang on, I'll be right back. I've been moving around. I've moved from the couch to the kitchen to the desk, and I'm back to the couch. So like I was saying, if we're getting a 58-cent dividend per month, and we project that out for the year, that would be $6.96. So now that we've dropped so low to $8.73, we're back to like a 77% payout. Whereas when we were up here at $11.98, that same 58 cents annualized would have only been 58%. So in a sense, the percent dividend payout went up 20%. So that can be looked at as good news, but it's important to understand. I don't want to call it a dividend trap, but it's like the dividend paradox, where your dollar amount may stay consistent, but the price of the underlying steadily declines. The first time I saw this as an investor was actually with AT&T. So AT&T was paying like an 8% dividend, and this is where, like I say, when you go to like etfdb.com and just sort for the highest dividend percentages. If you're just looking at high dividend percentages, you're seeing the what, but not the why, so to speak. So you've got to ask yourself, why is that dividend percentage so high? Is it just that it's awesome, or is it something else? Was there a big drop in the underlying? I mean, these are important questions as investors that should be asked. And asking such questions is in no way, a negative outlook, or, disrespectful of the fund manager or whatever. So I just hope you all understand that. I'm on here to not be a blind cheerleader for Tesly or for YieldMax. I do like YieldMax. I was very enthralled by it when it first started. I was like, wow, a 70% yield. That seems unheard of. And over the summer, we did great in Tesly. It was like, in some ways, too good to be true. We were running up in the principal, and we were getting like a 70% annualized dividend. It was incredible. I actually bought more in the summer when it was like $16. So, like, at first I was as excited as everyone about this, but I am a realist. And we saw the same thing with Coney and with SQY. We saw early on, within the first few months, we saw record payouts, and we saw the funds appreciating up to 35%, 30 to 35% in principal, which was phenomenal. It was like having your cake and eating it too. Obviously, when those things happen, it's beautiful for us as investors. It's great to have a 30% gain in your principal and get almost 100% dividends on an annualized basis is amazing, really. But the thing is, right now that's not happening. Can it again? I mean, if Tesla does come back, which, I mean, I think it will. I think Tesla's going to be around for a while. And right now the fundamentals suggest that it's still overvalued. If you do some of your own cash flow analysis and fundamental analysis, you will find that according to some of the analysis, it's still overvalued. So can it come back? Sure. But remember, it all depends on how it runs up. It all depends on how it runs up, how fast or how slow it runs up. And, these are things that we have to look at as, being realistic as investors. So I'm hoping. I actually have not sold any Tesla. Luckily, I haven't put too much in. Um, I would strongly. I mean, we don't give advice on this channel, but I mean, I would strongly discourage anyone from putting the bulk of their net worth into these funds. And again, that's just being a realist. Um, I would say right now, I personally probably have too much in these. If you get, say, to make the math easy, say somebody has like $1 million net worth. If you had 100,000 and a blended average of these funds, or if you just went into YieldMax, you could have, say, 20,000 in Tesly, 20,000 in Coney, 20,000 in SQY. You could get a decent dividend payout where your broker would project possibly a 50 or 60,000 annual dividend payout dollar amount, which is great. That can be a full-time salary. So if you have like 10% of that $1 million net worth in that, boom, you could be looking at a full-time income there as long as it lasts. But at least from my standpoint, I try to go by having majority broad-based index funds like the 401k. Thankfully, like I say, the 401k, with the employer constricting, what can be invested in the 401k to broad-based index funds, it kind of protects some of my more wild instincts as an investor. And I know that, I echo a lot of us in the community that are buying these funds. We're risk takers. We want to get ahead. We want to have decent dividend payouts and gain on our money. That's how we are, and I totally get that. But the 401ks with broad-based index funds, it's like good protection from our wildest instincts, so to speak. So say you have half of your net worth in 401ks or in IRAs that are in index funds. Like, index funds did phenomenally last year. The S&P or the NASDAQ, I mean, you could have done 40% rate of return as an investor and still gotten smaller dividends in some of those funds. But anyway, the moral of the story is, I do feel new investors are going to come in. They're going to see a 77% yield in Tesla, and they're going to say, "Wow, look at that. Let me buy in." Maybe they're buying in at a low. I mean, we can hope. We can definitely be hopeful here. We can hope that this is going to be the 52-week low, and then it's only upside from here, right? But we have to be realistic at the same time too. But I do think you're going to have a slew of new investors that are going to find the 77% yield, which the math is correct. 58 cents times 12 divided by the current fund price. Boom. The percentage did go up. To put a positive spin on it, boom, 77%. But when new investors see that, they're going to say, wow, let me buy this just for the yield. And who knows? We never know what it's going to do, right? It could drop in half again. So, and I think the rule of thumb, one of our followers came up with this. I think every $30 of a drop in Tesla stock equates to $1 drop in Tesla. So anyway, hopefully I caught you all's attention with this, and hopefully I put some realism out there with this, because you may see, wow, 77% yield, but look what the fund is doing. That's the thing. So, all right, let's see here. We've got ARK funds. Then Keaton says howdy. TSLP. So I just did a video on that. So I am putting out, we're not just a YieldMax channel. We look at Rex shares, we look at Defiance and all of that. We hope they defy the odds. And I know Jay is on the board of one of those too. And also the Curve shares I just did a video on. So, we want to look around. We want to source casting as broad of a net, as wide of a net as we can, right? So we want to look for dividends in all the places that we can. So we've got YieldMax, we've got Rex shares, we've got Defiance. Of course, we have dividend-paying stocks too, which we don't talk too much about. No one's mentioned what's the Israeli company again? I forget the ticker. Oh, Zim, isn't it Zim? At one point, they were paying like 100% dividend, which is crazy. But anyway, yeah, we did a video on that for sure. And let's see, new investor says 10% of bet worth into YieldMax. Okay, but what about the other 90%? What other kinds of things can we invest in? Oh, I just told you. So taking that, yeah, so 10%, the other 90%, at least for me, I'm not telling you all what to do. I don't give advice on here, but but broad-based index funds, S&P 500 fund, NASDAQ fund, small cap fund. I'm a big fan because I am a risk taker. I'm a big fan of the 3x leveraged, like the UPRO, the TQQQ. I've even done options on them. And when you time them right, which timing's hard, but when you time them right, it works brilliantly. You can make a quick couple of grand on them, but it doesn't always work. You could lose a quick couple of grand just as fast. So that one, and then of course there's the IWM, and then there's also the TNA, which is the other triple levered for the Russell 2000, which is still not at 2000, by the way. I've been buying Clip at 1550. It pays soon. Yeah. Okay. So good. Now I want to grow the Discord too. I'd like all of your help. I have to put this out there. I need all of you all's help. I appreciate all of you all as subscribers, as fans of the channel, but we need to start growing faster. We need to grow. We're kind of hitting a wall here. I want our community to grow and to be a big thing for years to come, for sure. So if you all can help, spread the word, I'd like to get Discord live streams with a lot of engagement going. That's going to require more of a time investment on my part, which I'm willing to work out and to do. I'm willing to put more time into this thing, but I definitely want to ramp things up here for all of us. Let's see. It's believed that due to the Red Sea crisis, Zim could pay a nice dividend in April. You mean you're not all in on Tesly? Oh, that's it. Too much disrespect for YieldMax. I can't handle it anymore. I just can't handle it. Just kidding. All right, you all. So we've beat this subject up about as much as we can. Thank you all for tuning in. Like, comment, and subscribe if you haven't already. If you haven't checked out the podcast, Brewing Great Returns, by the way, we did put out an episode where we talked about the books that we like, the investing books. And obviously there's many, many more. I've got this whole shelf behind me here with all these books. So there's plenty more books we could talk about. Let's see here. The name of the Dividend website I mentioned earlier. Well, it wasn't YieldMax. And I hate to say that it's not YieldMax because it looks like I'm disrespecting YieldMax. But it's etfdatabase.com. And I say that the little anecdote I gave was a personal story because there was once a company, there was once an oil company that went bankrupt. It was like, I don't know if it was fracking or what, but it was like an offshore drilling company. And I found their dividend at the top of the list because the share price had fallen in half. So that was the real reason why the dividend had increased so much. So let's see here. Find Zim. Oh, you like Zim, huh? Let's see. MRNY and the NFLY is doing great since Netflix. Yeah, we're going to see a huge dividend for Netflix. That's one we need to talk about, actually. Jay's doing a great job on those. Like, and the thing is, it helps when the underlying does well as well, right? So we give credit where credit's due. Like, I've been the first one to point out he did an incredible job for several months with Coney, SQY, and with NFLY as well. But anyway, and we look forward to having him back on very soon within the next month or two. So thank you all for tuning in. Like, comment, and subscribe if you haven't already. We'll see you all very soon. Catch you on the flip side. Ciao, ciao.